Live streaming is on.
Hey guys, as we go ahead and get started here in just a second, if you want to go ahead and put in the channel chat there where you guys are calling in from, we're going to start here about 30 seconds. Get the camera up. Super excited to have you guys on. Appreciate you guys for being here. Now we have people from around the globe. Go ahead and put in the chat. We got people from Chicago, Illinois, Texas, Austria, Czech Republic's in the house, California, Utah's here. By the way, we do have a Super Saturday. We just did an event last night. We have a Super Saturday in Utah. If you want information on the Super Saturday in Utah, it's a free event. Myself and Dr. Lee are going to be there. And we have a huge announcement at that event. If you have people around Utah and you want to have them come to this free event that we're doing, it is a 2-hour workshop. So prospects can come and existing members of the company can come for free. We do them every single month. Hit me up on social media. I'll make sure and get you guys access to that. Call is being recorded. Appreciate you guys for being here. When this is done, underneath the TV screen, you're going to see it titled. I will put out a message to make sure you guys get a copy of this that you can share with other active members that have the HFX package. And that way that you can always refer back to what it is that we're teaching each and every day. Also, want to welcome all the new members that have joined the last 7 days. If you're brand new, put NEW inside the chat. You've made the right decision to be here at I Am Mastery Academy. We're super excited to have you here. We teach master the skill. We teach you how to grab the fishing pole and reel the fish in rather than just having fish given to you. We want to show you how to do this because at the end of the day, those are the individuals that make the most money. One thing I want to remind you of, so today's Wednesday. You've got a couple more days to reach Club 50 and Club 100. The way that this works is we put out recognition flyers for Club 50 and Club 100 on Friday around lunchtime, our time here in the USA. And the way that it works is that on a consecutive 50 trades, minimum 50 trades, a win rate above 70%, that's Club 50. Club 100 is 100 consecutive trades, win rate above 70%. And so if you qualify, we don't care if it's a day or 2 days, a week or 2 weeks, however long it takes you to reach the club, send it over to jbboyd25@gmail.com. That would be your name, a very clear photo of yourself. And then we need proof of just put your wins, losses, your win rate percentage, and show the screenshots. But give us the numbers so it's a little bit easier for us to count and verify. We want to recognize you guys on Friday. Make sure and send those over. I'll keep putting out the reminders. We want to put you on social media and show the world that you are really learning how to do this. We don't care if you're doing it on demo, if it's a live account, if maybe you're getting some trades from other Go Live educators, that's completely fine in combination with the sessions that we do. So make sure and send those over. Also, don't forget the videos as well. We're putting out recognition videos. I just put one out for Ron Glover today. Make sure that you guys send over a 15, 30-second video where you just take your phone, just talk about what this has done for you. You don't have to give income claims and non-compliant stuff. just send it over. We'd love to have that and recognize you on video as well. Want to mention as well, as far as social media, and I'm not going to show it here on the screen, but I only have one social media account. It's Brandon Boyd Official. Now, there's other people who have done Brandon Boyd Official as well, but mine is one that has 47,400 followers. That is my only account. Any other account is a fake account. I get messages every day, people saying, hey, are you trading people's money? Are you accepting Bitcoin and all this kind of stuff? It's not true. I have one account. I've never traded anyone's money. I wouldn't put myself into it. We can't even do that as Go Live educators anyway. Even if I wasn't a Go Live educator, I would not be trading other people's money. You got to have a license to do that, okay? So make sure that that's the account that you're connected to and not the other accounts. Block the other ones, report those other ones so that they can shut those down. Now, on a positive note, let's go ahead. I'm going to do a share screen with you guys here. And let me turn off my camera before I do that. One of the services that we use inside this company is called Hourglass. Hourglass has a strategy inside of it that was actually created by Matthew Thayer, one of our educators. And it gives you these arrows. They pop up every 5 minutes of the day. And what those arrows do is they are actually giving you these trades that are automatic based upon the strategy. So here you have the scanner. It has a strategy created behind it. And so an arrow will automatically pop up every 5 minutes of the day, which means that you have a potential trade opportunity once you get confirmation that this is a good trade to get in, which is the reason why we do these sessions in the first place, is to help teach you the point system with Cash-Trap. We train on it all the time. Matt Thayer trains on it 5 days a week. So we want to make sure that you guys get access to this. We don't make any money off this. It's $22 a month. You can get it right here in your back office, which I'll show you. You go here, click on menu at the top left, depending on if you're getting it on your phone or computer. Shopping cart, you can add it right there, 73 cents a day, month to month, no contract. If you like it, great, keep it. If not, turn it off. You can always remove an add-on service. But we do recommend it because we use it so heavily in our training. Okay. All right. Now, I want to show you our Go Live section here and how to actually use this. Okay. So the way that this works is once you're on our Go Live right here is we record all of our sessions. All the sessions we do are recorded, plus we title them. So let's say, just as an example, that I wanted to, let me refresh this here because I want to find the search bar. So right here, you're going to see at the far right, see where it says search video? So if I wanted specific trainings on Cash-Trap, I could actually type in Cash-Trap and it's going to bring up those trainings. They're very thorough, by the way. Side to take the time to study some of the trainings that we've done, you will do phenomenally well because now you will have the knowledge that you can now apply to be more accurate with the trading that you're doing. It's all about the win rate, and then it's all about being able to keep your risk at a minimum 1 to 3% per trade. Protect your account and then grow that account. So what I want to do now is we jump right into it, is bring on my trading partner and educator, Dr. Lee. We met 19 years ago, and a few years ago, I presented to him IM Academy, said you may want to check this out. He started doing it on a part-time basis where he was trading on his own, and then as we linked up together and he became more and more successful, became evident that this could be his future. So long story short, you now fast forward the time. It's been about 2 years since Dr. Lee was a full-time practicing doctor. Today, he is a full-time trader and educator, and to me, that's a wonderful testimonial of somebody who went from something in a profession that he was already successful in to really create that time freedom, and now bless you guys as well to be able to share what he learned, what he had success with, and how you guys can duplicate that as well. So with that, let's go ahead and turn it over to Dr. Lee.
Excellent. Thanks so much, Brandon. Appreciate the introduction and grateful to be with you all today. Today is Wednesday. We've got some very valuable pieces of information to share with you today. We're going to be expanding on the concepts that we discussed yesterday with regards to top-down analysis and how you can further apply some of the cash trap as well as Go Liberty strategies to be able to integrate with that top-down analysis and make sure that you're identifying the good location where you want to take a trade, as well as why you're going to take that trade, that actual trade entry reason. And so we'll discuss that today, and then we'll kind of continue with that as we go throughout the week to fine tune and really give you those specific trade entry reasons on why you're going to push the button. We get that question all the time, and so we make sure we cover that extensively and frequently. And so as we begin today, I want to share a powerful mindset concept with you that I think is very important for your long-term trade success. So I'm going to share my screen with you, and we're going to get right into this. Like that. Excellent. So the thought is this. It's by Albert Einstein. He was obviously a very smart, intellectual fellow. He knew a lot about mathematics and things like that. And so, as you can imagine, he very much bought into the idea of science and the importance of evidence, the importance of being able to come up with an explanation or knowledge to the universe around him, the world around him, why the earth works like it does, why speed and acceleration and all of these kind of concepts, why they work the way they do. And he became famous for developing a simple equation, E equals mc squared, right? So what is this really telling us? The speed of light. He was trying to come up with a measurement, a mathematical explanation to the speed of light, something that we can't see. You can't, yes, light fills the room, it fills the space of Earth to where we can see the world around us, but what really is light? And I won't go into too much detail on the theories behind that, but here's the basic principle, is that it took imagination for him to be able to even consider that which he could not see, that which he did not know. At the time while he was on the earth, right, there was only a limited amount of knowledge. And in life, we need knowledge. We need that knowledge becomes a valuable and important element of us being able to provide solutions to all of the different problems that we face. And one problem or one thing that we all need is additional money in our lives. It's not because money is the most important thing in life. Certainly relationships, people are far more valuable than any money could ever be. But it does require money in order to even just do life, in order to be able to buy food, provide your kids with different activities, clothes, shelter. No matter where you live in the world, you need money, right? And it may not be a lot of it, but you need something. And so the question is, how do we go about getting it? What is the knowledge that we need to obtain? And how do we get more of it? We see people who are near penniless, right? They're broke their whole life. We see other people who live as billionaires their whole life. What is really the difference? And how do we go from being broke to having the kind of wealth that many people desire? And so I want to share this thought with you. He says this: imagination is more important than knowledge, for knowledge is limited to all we know and understand, while imagination embraces all there ever will be to know and understand. You see, imagination is really referring to that kind of creative aspect of our mind that considers that which we cannot yet see. When the Wright brothers were first considering flight, they knew flight existed. They could look around them on any given day and see that birds were flying through the air. But up until that point, nobody had really flown in a plane, right? They didn't have jet propulsion. They didn't have all the technology that we have today that makes flying a very normal part of everyday life for people. But at that time, they had to consider what seemed at the time to be an impossibility. And for each of you, as you begin this trade journey and as you're working on your trading account, you may look at your account balance. You say, man, I've got $200 in there. I've got $500, or I've got several $1,000s, whatever that balance may be. And you say to yourself, I can't hardly imagine that account being millions of dollars or looking like the size of accounts that you see the Go Live educators have. And so it's going to require some imagination from you to be able to develop the belief and that it's even possible to get to that point. But here's what I can promise you is that obtaining the knowledge, the trade strategies, everything we teach in this course is really only one aspect of what will help you get there. Yes, you need the knowledge. Yes, you need to learn the skill and all of those things. But you ultimately need to develop the imagination to believe that it's possible. And that's what will help you emotionally to get your trade account where you really want it to be. As a second part of this thought, I want to share this with you. Knowledge will help you to learn and master a trade strategy. We teach strategy every day, well, 5 days a week, right? And there are many Go Live educators that will teach you plenty of great strategies that work, but it will take imagination and belief to use that strategy to build wealth. Because the thing that holds people back isn't strategy. It's not the knowledge. People say, oh, I can't get to where I want to go. Well, the vehicles are there. The resources are there. The cars are there. The shoes are there. Whatever you need to get to your destination, they already exist. Most people lack the imagination and the creativity and the belief that they themselves can do it. So we develop limiting beliefs that keep us down. Sometimes with our trading, something that is an important element of what we do in the beginning is we start with a small dollar amount. We may start with a $1 trade. Some brokers even allow you to go smaller than that. They'll be executing trade sizes in the pennies, right? In the very small sizes, and that's fine in the beginning. While you're trying to prove your consistency and improve your confidence and your ability to execute a trade strategy consistently, it is important to use very small dollar amounts. But over time, the only way that you transition from executing those small trades to getting to the point where you can do like many of the Go Live educators that you see, where they're doing thousands of dollars, sometimes even hundreds of thousands of dollars on any given trade, the way they do that is they had to increase their imagination. They had to increase their belief. They had to increase in their emotional capacity to be able to handle executing trades of that dollar size. And the way they do that is they begin to think in terms of percentage rather than dollar amounts. This is a very important principle when it comes to trading mindset. Because if you always think of, well, what is a big dollar amount to me? Or what is a big currency amount to me? I recognize that not everybody deals with dollars on this call. We have people all over the world. You may deal with British pounds. Some other will deal with euros or whatever currency may be in your country, and that's fine. So whatever large currency amount that you would consider, recognize that that is potentially limiting your ability to expand your account. Because you find that emotionally, you start maybe with a dollar trade, and as you grow that, now you're doing $10 trades or even $100 trades, and there comes a threshold emotionally, psychologically, where you say to yourself, and maybe you don't say it explicitly, but kind of emotionally it begins to happen where you go, boy, this is starting to get stressful. If I lose this trade, that's a lot of money I'm about to lose. And so that limiting belief that is part of our kind of subconscious, that's based on maybe the circumstances in which you grew up. Maybe you grew up in a home that didn't have much money, and so you never could comprehend having a lot of money. And so as you begin to increase those dollar amounts on your trading, you begin to self-limit yourself. And you find that month after month, you're still doing those same $1 trades. Now, we're not condemning doing $1 trades or anything smaller than that. In fact, we encourage it, especially in the beginning. It's part of the learning process. But the message today that I want you to consider is that if you ever want to get to those big dollar amounts, you have to begin taking trades in terms of percentage and not a dollar amount. And the way you do that is you simply choose a percentage that you would want to risk per trade. That may be anything between 1% and 3% typically. Most of the time, we don't recommend going much above that, because that means that if you happen to lose a trade, it's not really going to beat up your account all that much, okay? And so as we consider that then, once you've decided, and let's just use 1% as a simple example. If you risk 1% of your account, let's say you have a $1,000 account, that means you're going to risk $10. And as your account continues to grow, let's just say you grow it to $2,000. Well, now your trade size is now $20. You're still doing that same 1%, but you've actually doubled the trade size that you're taking. Now, if you continue to focus on a percentage basis, fast forward some time, you'll often see in some of the educators who call out the live trades, such as Matthew Thayer, when he calls out a near $100,000 trade, $50,000 or $75,000 trade, we'll use 75,000 as an average. Okay, he does some below and some above that. On his account of over $8.5 million, what percentage is that? It's less than 1% risk. So even though a dollar amount, most people are kind of crapping their pants. They're just going, holy smokes. He just put 75 grand on the line. He could buy a brand new, extremely nice car for that. He could pay off half my house or whatever, right? So that is a lot of dollars. But the important thing is the reason why he's able to do that over and over again is because he developed from the time he had a $500 account to the point where he could mentally handle having trade sizes that big, because he thought in terms of percentage of his account and not just in dollar amount alone. So take home message, consider your imagination. These sessions are all about knowledge, but when it comes to building wealth, you really have to have some imagination. You have to have a belief that you can actually get there. You have to begin to comprehend those bigger numbers and be able to handle that as you're executing those trades. Otherwise, emotion will come into the picture and begin to cause you to kind of mess up. You'll start to fumble. You're like, oh boy, I really don't want to take this next trade because that's a lot of money, right? You start to think in that terms, and now you're limiting your ability to grow. So with that, let's jump into talking about more of top-down analysis and how we can go about utilizing that in conjunction with CashTrap as well as Go Liberty to improve your overall trade results. Now, yesterday, as we talked about top-down analysis, the primary thing that we discussed was identifying a higher time frame pivot point and then looking at a lower time frame entry point. Okay, so and this applies to any kind of combination of two time frames. If you're looking at a 1 hour time frame chart as your high time frame, then you would jump down to a 15-minute time frame chart for your lower time frame. If you're looking at a 15-minute as your higher time frame, then you would use a 5-minute like an Hourglass and in Go Liberty for your shorter time frame specific entry. And so as we get started, I want to illustrate just a simple example to constantly reinforce the idea of these pivot points and why this is so important as an infrastructure for your overall trade analysis and approach to the markets. So here we're looking at Ethereum. Now, many people have been talking about many cryptocurrencies, Bitcoin, Ethereum, Ripple, what all is going on in those markets. There's stocks that they're talking about with GameStop and Tesla and so forth. And no matter what you're looking at, no matter what you're trading, and no matter what time frame chart you're looking at, anything from 1 minute up to a 1 month time frame chart, the same principles apply in terms of trade strategy and technical analysis. And as a foundation, price action is always there. So when we look at say a 15-minute time frame on Ethereum, okay, very random. We don't normally teach on a 15-minute time frame, but I chose this arbitrarily just to illustrate how these same principles apply. So I just want to give you a simple example just as we begin here to look at some of these locations where price is changing directions. So as we look at each of these top pivot points where price changed directions, we're just going to put a horizontal line at some of these locations. And I want you to note that one of the basic strategies that we teach as you apply this into CashTrap, as you apply this into Go Liberty, is simply a breakout and a retest. That in the market phase that is trending, you can typically expect a breakout and a retest. And so as we look at these different levels, okay, and we'll just include just the top pivots on this case since we're in an uptrend. Ultimately, our rule is if price breaks above a previously known point of resistance, a pivot point. In other words, price was coming up, and where did price get kicked down? You hit this point and boom, price gets really pushed down hard. So we see that, we sometimes refer to that as rejection, right? Price tried to go up and it got rejected. Just like you might see a professional basketball player goes up for a layup and the other guy comes up, swats the ball, he got rejected, right? He was trying to make that ball, that hoop or that shot, and he got rejected. The same thing with the price is as price is moving in a given direction, if it gets pushed back in the opposite direction, it got rejected. That's kind of what we mean by that. So as price gets pushed down, that rejection, what that tells us is that there were new sellers in the market that were pushing the price down. So that's good information because ultimately price can do one of two things. It's either going to come back to the same previous level and get rejected again, or if it breaks through, we can expect price to come back to that level, retest to it, and then continue onward. And so in this nice uptrend that we see with Ethereum, we're seeing these consistent breakout and retest type price action structures. And we just see this over and over again with this. And we're currently in a nice breakout here currently with Ethereum. It's just hit $1,650. It's pretty remarkable. But now anybody could have said, well, I think that Ethereum is going to go to $1,700 today. And that's pure speculation. Nobody knows for sure. Nobody can know. And even if it does, those who said it would, okay, you could say that they're right. But was it based on any evidence? No, it's pure speculation. And we don't get a good win rate on our trading by speculating. We need some evidence to suggest what price might do next. And so we look for that evidence in the market and base our trade decisions on that. So as a foundation, as we look at price action, we want to look for price we want to look for these pivot points in the market because that becomes the architecture and infrastructure for our trade strategies. Now, when we're doing top-down analysis, we're simply looking at multiple time frames, and then we're combining other trade entry reasons and technical indicators to further confirm why we might take a trade on the lower time frame. So to illustrate this example, here's what we're going to do. I'm going to jump off of Ethereum for a minute, but I just wanted to kind of illustrate how there was some beautiful price action on that, again, on a random time frame, 15 minutes. And so you can see this works on anything. And we just always try and reinforce that basic principle. Okay, so we're going to come back to gold just for the heck of it. It really doesn't matter what we're looking at. And we're going to start on a 15-minute time frame. And then we're going to jump down to a 5-minute time frame. So we're going to use 15 minutes as our higher time frame from a top-down analysis process. And then we're going to drop down to a 5-minute time frame to look for specific trade entry reasons. And one of the things that I want to emphasize today as part of our top-down analysis is one of the things we can look at is price patterns. Okay, and again, all of these principles are applicable once you're going into Cash Trap or when you're in Go Liberty. You have to first identify where you're going to take a trade and then look for that final trade entry reason. Within Go Liberty, especially within some of the new strategies, such as Simple Scalper 2.0 or Pickpocket 2.0 or any of these, you get a lot of arrows. A new arrow pops up constantly on these charts. You get buy and sell signals on a regular basis. You also get arrows, as Brandon talked about before in Cash Trap, every 5 minutes of the day. So how do we know which arrows to take and which ones don't? This is why it's important to first identify a location where price might turn around or where price might respond to. So for example, here on NZD USD, price had been coming up, got rejected, price came up again. It's very close to this Bollinger Band. We're at a previous pivot point, so price can either break up through it or it's going to reverse. Well, in this case, it reversed down. So as price came back up again to that same price level, right, we are looking for some evidence to suggest that price might reverse again. And as you can see, price responded nicely where it's right up at the upper Bollinger Band. So we can combine some of those technical indicators to identify that that's a good trade. But we first had to identify that this location, meaning at this previous pivot point, was an area of interest. If we're looking for a trade opportunity but in the wrong location, you'll find that your trade results will be a little bit inconsistent. Okay, your win rate will not be as good. When you begin to look at the right location, you can dramatically improve your overall win rate. So as we're looking at this then, how then do we look at the right locations? Well, sometimes when we combine a higher time frame with a lower time frame, we're kind of identifying one area of where we might get a new surge of movement, okay, such as a breakout and a retest on a higher time frame, but then we use a smaller time frame to kind of really give us a precise entry. So here, just recently on gold, we've got two different market phases here. Looks like we've had a bit of consolidation that you can see down here, and we had a nice trending time earlier, okay? And the strategy works in both different scenarios based upon looking at these previous pivot points and then looking for a reason to take the trade. So as one example, here you can see that price started to work into some consolidation. It started to push up temporarily up into this zone, but really has just kind of developed this consolidation range. So as price came up to this level, which is very close to this previous pivot point, did we have any sign that price would then go in the downward direction? And could we have considered a put option at this level? So we're going to add a down arrow at this level, knowing that price had pivoted right at this level. And we're going to look and see what is a sign that, or a price pattern or something. And I haven't even looked at this. So we're just going to dive into it and we're going to see what we see. But we're going to see, was there any evidence or reason to take the trade at that level? So top-down analysis, we could have said, okay, price responded previously at this level. So if it comes back up to it, will price respond again? So if we drop down to a 5-minute time frame chart and we come back here, again, we're looking at price alone for right now. We're going to add some indicators that you'll see in Simple Scalper as well as Cash Trap that you can then use to further confirm what price might do. So here's our blue line, which was one of those previous pivot points. As price came back up to that, yes, we can see that price got rejected. And so, but do we have additional reason why we could take the trade? One trade entry reason could be preemptive. You can say, well, as price comes up to this level, I want to preemptively take a trade. Usually that's not always the best reason unless you've just got a solid breakout and retest structure and you want to take it based on that, in which case that you can have a good trade entry reason. If you're looking for a confirmed trade entry reason, you need to see something else, either a confirmation candle or you want to see some kind of price patterning. And in order to look at price patterning, you need a technical indicator to provide some additional evidence for you. Because again, we don't want to speculate. We want evidence to suggest what price is going to do next. And so one of the commonly used indicators that we have in Cash Trap is the Bollinger Band. And you also see this in the simple scalper strategy. You have the Bollinger Band on the top and bottom. So let's add a Bollinger Band to our chart. And we're using TradingView simply to make this kind of look clean and give you an idea for what this looks like. So the first time the price comes up here, we can see that on our RSI and as well as the Bollinger Band that the price has pushed outside of the Bollinger Band. Now, as a review, the Bollinger Band is a statistical tool that what that means is that statistically speaking, over 98% of all price movement activity, all these candles, will take place in between the top red line and the bottom green line. So what that suggests to us is that if price pushes out beyond the Bollinger Band, as you see in these situations here, price is likely going to turn around. It just doesn't stay out there for long. Over 98% of the time, price is going to be inside of the band. So if you see price pushing to the outside of that band, you can bet that price is about to turn around within the next couple of candles or so, okay, if not almost immediately. So in this particular case, price comes up, gets rejected. Now let's just say we don't take that trade. So we see price gets rejected down. We knew that this was kind of an area of interest based on the 15-minute time frame chart. But we can see on the 5-minute time frame chart that we did get some rejection. But what is a price pattern that we could then use to identify that this might be a good opportunity? Well, let's just delete a few of these little drawing tools just so that they're not in our way. And let's look at a potential price pattern. What do we see? Well, price initially came up to this level, got rejected down, okay? Rejection because the price was going up, now it got pushed down hard, right? We see this huge wick on this candle, price gets immediately pushed down, and then price comes back up again. And it really tries to push outside of that Bollinger Band. But we know, because of how the Bollinger Band is calculated, that price typically doesn't stay out there for long. So as price pushes out to the out of the Bollinger Band there, we can see that that if we draw our line straight across, we kind of have a double top. And that if we look down at the RSI before this downward move here, if we compare the two, we can see some divergence forming. Divergence is a phenomenon that we see in the market where with similar price levels, okay, the RSI will show it's losing momentum. So between the first time it came up to this level, and then the second time that it came up to that level, and I recognize that this peak here is more at this level, so that's a more direct comparison. And because of this short-term little spike here, we're basically considering these two peaks as our primary comparison for divergence in this example, okay? And so we're seeing a reduction in momentum even though price is coming up to that same level. When we combine that with the fact that price is at the upper Bollinger Band, what that tells us is that there's some overhead resistance and that price is likely going to respond. So we have two different options here. When you see divergence or when you see a price pattern at a smaller time frame, such as the 5-minute, in comparison to a higher time frame, 15-minute time frame area of interest, which could be at these pivot points, it could be at this flat bottom here, and I'll go over that in a second. Ultimately, we then can look for a confirmation candle for a potential entry reason, or you could take it preemptively. So preemptive entry at this point would be that, hey, price is coming up to the same level, pushing out, we could enter as price is beyond the Bollinger Band for a put option for 3 candles, 1, 2, 3 candles. That would have clearly been a winning trade. Secondary option is on that second touch point, if we get a confirmation candle, we could also take that trade for 3 candles. And again, typically in consolidation confirmation candles are not always the best trade entry reason, because even like as in this example here, this red candle almost transcended the entire height of the Bollinger Band. What that means is that oftentimes in consolidation, if this candle goes the full length, it may not have much further down to go. over the next thing. And so you might get a short-term reversal in the opposite direction. So you want to be mindful in consolidation phases, taking confirmation candles. They're typically best when used either with a specific price pattern, such as divergence, or in trending times, a breakout and a retest. That's where they tend to work the best. All right, so in this particular example here, we can place a put option at the close of that candle, which would be at the bottom. 1, 2, 3, price closes here at the top of this green candle, and we would have won that trade. And so the process, though, is to, again, look for an area of interest and then look for a price pattern at the lower time frame that would suggest that it's a good idea to take that trade. So one way that you can apply this directly into Cash Trap or into Go Liberty is you'll note that in Cash Trap, for example, they show us the 5-minute time frame chart. So if you go into your TradingView account and you go to a 15-minute time frame chart, and let's just say that we're looking at NZD USD. All right, so if we come over here, let's take a look at that. So if we go NZD USD, let's go to a 15-minute time frame chart. Let's look at some areas of interest. Now, one of our most recent pivot points on the 15-minute time frame chart, I'll just put a horizontal line, was up at this level here. So as price got rejected, grab this tool here, as price got rejected, came down. If price comes back up to this level, we're going to look for a potential trade entry reason before price could potentially go down. And so at this level, 72.061, let's drop down now to the 5-minute chart and see what we see. And then we'll go into Cash Trap and we'll show you what that would look like in there. So if we drop down to the 5-minute time frame chart, what do we see here? We actually see some, interestingly enough, we see some hidden divergence, which you probably won't understand right off the bat. But here's what we do see that's a little bit simpler. I won't go into the hidden divergence just yet. We can see that we are in a bit of consolidation. So as price came up to this level, all right, our area of interest is up by this blue line. Why? Because that's where the previous point of rejection was at. And so we're saying if price comes up to this level, and if we get a confirmation candle, then we could take that trade. All right, so that's one trade entry reason. So we could enter at the close of this red candle. Again, we're looking at the 5-minute time frame chart. We take the trade for 3 candles or 15 minutes. Price would close down here, and we would win that put option trade. One of the other evidences, though, because we always want to look for confirmations from our technical indicators, we have the Bollinger Band up top, and we know that, hey, price pushed out beyond there, but it's not going to stay there very long because we know that 98% of the time, price is going to move inside of the top and bottom Bollinger Band lines. We can also see, if we look down at the RSI, that the RSI at that point is inside of the 60 and 40. And for those who have been part of our sessions, you know that that means that you're typically in consolidation. This is commonly known as a sniper move, which is a general strategy that I developed where if the RSI is between the 60 and 40%, then you can preemptively take a trade while it is actually outside of the Bollinger Band and preemptively enter that trade for 3 candles. Okay, that's known as a sniper move. Because what it's showing us is the RSI is telling us that there's not that directional momentum. And so when the price is out there, it's saying price is pushing up, it's coming up to this known previous resistance line, but we don't have the momentum based on the data that the RSI is telling us to suggest that price will continue to go in the upward direction. And that's what gives us the justification to be able to take a put option at that time. And the same thing would occur at this level as price came down, pushed to the lower Bollinger Band line. You'll note that the RSI line or RSI was clearly inside of the 60 and 40, and so you can take that reversal trade. Now, anyway, so that's how we would go about looking at this. Now let's take just a little bit closer look. I'm going to delete that circle there just so that this doesn't get too messy. And I want to drop down one more time frame and just see if we can see anything else. All right. This is why, you often see that Brandon and I use the 1-minute time frame chart, and this is the reason why. When you're comparing multiple time frames, as you zoom in, as you look at the smaller and smaller time frames, it's not that it's just inherently better, but sometimes you can see a little bit more detail. And so I'll leave these 2 lines here. This was our entry point based on the M5 entry, and this is where price would close at the end of that 15-minute trade. And so when we're looking at this, here's our blue line based on the M15 resistance level. This is our point of interest. You could have taken a preemptive trade up at this location, but let's just say that we didn't. So if we drop down, do we see any further price patterns that would suggest that this is a good trade? We absolutely do. And what we see here is also some clear divergence. So when you look at these price peaks, as price gets rejected here, and then it comes back up to this level, and you say, well, is this true divergence because the spike shoots way up there? Yes, it is, because again, what we're comparing is the RSI momentum. Okay, so when price first got to this level, RSI was way up here. By the time it got back up to that level a second time, RSI is way down here, close to the 60%. And you'll know from our past trade entry reason trainings that one of our trade entry reasons is key numbers of 60%, 40%, and 50% on the RSI. Those are key levels that we can look for potential trade entry reasons. And so here, as price pushed up, note that the RSI stayed right at 60%. So that becomes our area of interest, and so we could literally preemptively take the trade at that level. Now, for a minute or two, yes, price went potentially against that trade and then went in our favor. But the point is that can potentially give you a little bit better precise entry that's better than, say, the 5-minute entry. Now, it's easy to kind of overanalyze this, to begin to utilize way too many time frames. And so recognize that utilizing a top-down analysis approach of a higher time frame chart, such as the M15, jumping down just one time frame, down to, say, the M5, looking for your specific trade entry reason is a good idea. Jumping down a little bit further than that, going down to the 1 minute, you might be able to see a price pattern a little bit more clearly, seeing some of this divergence. This is a significant drop in momentum between those areas of interest. And so that can give you a very precise trade entry reason if you want to look for that. Now, if you don't want to jump down to the 1 minute time frame chart, that's totally fine. But as you can see, even on the 5-minute chart, we got a plenty good sign by seeing the Bollinger Band on top of this price movement. We're clearly right at, grab this rate tool here, we're right at these previous pivot points on the M5, further suggesting that this is an area of resistance because price got rejected multiple times at that level before price ever came up to here. Now, our best entry certainly could be up there if you wanted to preempt that move, but if you wanted to wait for a confirmation candle, it's equally as valid a trade entry reason. And then the nice thing about it is that you get to see the evidence. You don't have to speculate and go, I think this is going to go down. You actually get to see the evidence that it is indeed going to go down. So even worst case scenario, you could look at the M5, enter at the confirmation candle. That's further confirmed by the RSI below 60% on the M5 time frame, and thus we can take the trade. Now, the hidden divergence, if you are curious about that, hidden divergence looks like this. It is a price pattern. You can see that price is moving upward, okay? Well, it's basically flat, okay, right at that level. But what we're seeing is kind of the opposite of normal divergence. Normally, on divergence, you want to see a reduction in momentum. With hidden divergence, you actually kind of see this reset phenomenon where you actually see the momentum increasing before the big drop. And so that is known as hidden divergence when you have a flat top, or maybe it increases a little bit or decreases, but you see the opposite in the RSI. Don't dig too much into that. Hidden divergence is an advanced concept. Most people don't use it on a regular basis. It's actually a pretty difficult concept for most people to execute it, so I wouldn't worry too much about that or spend too much time digging into that. Main primary areas of interest here are top of the Bollinger Band line, which again, you can see in Cash Trap, you have the Bollinger Bands on your chart. If you go into Go Liberty and you go into Simple Scalper, you have the Bollinger Bands on your chart. So you don't even need TradingView to do this. You can jump between time frames. A couple ways to do that, just so that you know how to do that. If you don't have TradingView or you want to just use Go Liberty or Cash Trap, there's two ways of changing between time frames so that you can do this top-down analysis process. On your right-hand side of your screen, you can see this M15, H1, H4, and D. That's a daily time frame. You can select between those. So you could select, for example, on this particular, we're just on the Simple Scalper 2.0, you could jump between the H1 and the M15. Those are two time frames that you could use. If you wanted to do the M15, you could click on that. As the screen refreshes, We could identify some areas of interest. So we could say, hey, we want to look for, let's grab a rate tool, and let's just do this top up here. I'm going to increase this thickness so that you guys can see this clearly. So if we identified this as an area of interest, we said, but when price came up to here, it got rejected, stayed down for a while. So the next time it comes up here, we want to look for a potential price pattern. But I want to see that on a smaller time frame. So the way you can do that is actually come up here on the left side of your screen where it says 15M, and you can drop down to a 5-minute time frame chart. And now you can see this in a little bit more detail and look for specific price patterning. You can look for specific confirmations, a confirmation candle. Note how the price is at the upper Bollinger Band. You could get that red candle. That's a confirmation candle. It's at a known level of a higher time frame. So you could take that trade for 3 candles. 1, 2, 3. Price closes down at this level here, right there. Not very thick, so we can't see that. Let's thicken up that line there. So it closed at this point, and we would win that put option trade. Our entry, again, would be at the close of this red candle here. All right. So utilizing a top-down analysis approach, what's the theory behind that? Why does it work so well, and why would anyone want to use it as opposed to any other approach to the market? I can guarantee you that every single educator on Go Live uses at a level some form of top-down analysis. Because the theory is this: if we're looking at a higher time frame, let's just say the 15-minute, okay, and then we're comparing it to the lower time or the 5-minute, this would be the same for any comparison of 2 time frames, 1 hour to the 15-minute, the daily to the 4-hour, etc. When you're looking at the higher time frame, what you're counting on is that when you get to a known resistance level of a higher time frame, you're likely going to get a more significant price movement when it comes to that price level. So when you then drop down to a smaller time frame, you can then get a more precise entry, but yet have the strong price movement or that momentum be in your favor. So you're looking for that general price level of where price might go to, but you get a little bit more precise. Just as a scientist might look at under a microscope to get a close-up view of what's really going on, at a molecular level. Similarly, as we drop down time frames on our chart, we're just seeing a little bit more detail of what's actually going on with the price. It doesn't mean always a shorter time frame is better. For example, on my chart, I can go all the way down to 5-second time frame charts. So each one of these candles is 5 seconds. That's not super useful. Price moves considerably. You see a lot of gapping in the candles because price is jumping all around, and it's only counting price movement every 5 seconds. Now, all of the same principles do apply that we always talk about, but it kind of gets to the point where you have too much detail, and again, you also have to take into consideration what is the length of trade that you're taking. Well, the minimum length of trade that you can typically take on most brokers within HFX is 1 minute. And so you would have to be using a time frame that would give you enough information to make that prediction, right? Maybe a 15-second time frame or so forth. But for most people, it's impractical. There's too much price movement at the small time frames. And so they're generally looking at a 1 minute, 5 minute, or 15-minute time frame chart, sometimes more, right? It doesn't hurt you to choose a higher time frame, just means that it takes a little bit longer for price to actually move in that given direction and for those price patterns to form and so forth. So, but the take-home message for today for top-down analysis is to use a higher time frame to identify a key level of support or resistance. Support and resistance are the same thing. They're just referring to either the top or the bottom pivot points. Okay, support is on the bottom. It's like the floor. Overhead resistance is like the ceiling to price. And so if price is below a given level of resistance, then it is considered resistance. If it is above a given level of resistance, that level is known as support. So similar to synonymous terms, support and resistance, general resistance. In my own trading, I just refer to them all generically as points of resistance because that's what they are. But you will hear a lot of educators refer to them as support and resistance because they're referring to where those lines of resistance are in respect to price. So in other words, just to make this very clear, if I drew a line here and then I drew one up on the top, right, the bottom line would be support because it's underneath the price. This line on top would be referred to as resistance because it is on the top. It's more like the ceiling to the price, and this line would act as the floor to the price, supporting it, causing the price to move back in the upward direction. And so, but identifying these levels on a higher time frame and then dropping down a time frame to look for price to respond to it, it makes it a lot easier to kind of filter out the noise, because there are oftentimes kind of these interim areas where price will respond. But isn't it interesting that even with the Bollinger Band here, price came all the way up and touched that level? It's no coincidence, right? There's a reason why price comes down to these previous levels before it turns around. And these are the true support and resistance levels. And you can identify those by looking at the higher time frame. Now, the last thing I'm going to cover today, before we wrap up today's call, is just to quickly review the idea of flat tops and flat bottoms. This is very important and very helpful to identifying these resistance levels at the higher time frame. So if we look at back at our higher time frame, or the 15 minutes, and we're going to zoom in here so you can see this. There are kind of two things that you can go off when you're identifying key support and resistance levels. One is the wicks. We see wicks stick out beyond the Bollinger Band, for example, like at that level there, or when price came all the way up here, or things like that, or like this one here. Okay, so those were the wicks levels. And so if we drew a line literally at those wick levels, bring that down a little bit more precisely, you can see that that is a general level that we could consider. All right. Now, when we talk about flat tops and flat bottoms, this is a concept that gives you a really good idea for where price will likely respond to. So, for example, and what they are, I guess, before I get into that, is anytime you see a green candle coming up and then a red candle immediately goes down, that becomes a flat top. Okay, so right there is a flat top. An example of a flat bottom is anytime you see a red candle go down and then a green candle immediately goes up. So right here is an example of a flat bottom. Here is an example of a flat top between these two candles here. Here's another example of a flat bottom. You have a red candle coming down and immediately a green candle going up. The wicks do not matter when we're identifying flat tops and flat bottoms. So how do we then use these? Generally speaking, you can definitely look for price to turn around or to reverse when if price is below a flat bottom or above a flat top. So let me give you a couple of simple examples. So as price was meandering sideways here, it's going sideways, going sideways, going sideways, and all of a sudden we have a breakout to the downside. So when we're looking for price to retrace back up, we're looking for, in a sense, that retest moment. We're considering this level here, and we're expecting price to go down. And so we want to then drop down a time frame and look at that area of interest. So let's draw a line at this flat bottom, and I'll erase some of these other ones so that this is not confusing to you. Now, because price had pushed below this flat bottom, we can expect price to come back to it and then get rejected and respond off of that. So if we drop down our time frame, let's put an arrow where price came up to it, just so we can easily find that after the fact. When we drop down our time frames, this is a good common tool. You put an arrow where you're looking, then drop down your time frame. You'll be able to find it a little bit easier. All right, so here is our level. We're now looking at a 5-minute time frame chart. This blue line is where that level is. So we can say to ourselves, okay, if price comes back to this level, and if we get a confirmation candle based on the lower time frame chart, the 5-minute, then we'll take the trade for 3 candles. So as price comes up to this level, the green candle hits it, the red candle comes back down. That's our confirmation candle. So our specific precision entry is at this level. And we call it a precise entry because it's based on the lower time frame, where it's kind of we're zooming in a little bit on the details of the price movement to see more of what's going on. So price, we would enter in at that confirmation candle. Let's grab our brush tool here. It would be at the close of this red candle here. 1, 2, 3. Price closes down here. We're in the money the entire time, and we win that trade. So that's an example of how you can then use, again, a price pattern, confirmation candle, entry reasons, or an arrow. So you could drop down and you say, if price comes up to this level and I get a down arrow in cash trap, then I will take the trade. right? So, but we're using top-down analysis first before we then look for that final trade entry reason. And how did we look for that location? By simply looking at a higher time frame chart, and we noted, hey, here was our flat bottom. Price has moved below that. So if it comes back to it, let's look on an M5 to see if we see an entry reason. That's how it works. It would be the opposite in a flat top. So here, for example, I'll just jump to one that I just saw immediately. Here's a flat top, okay, where this green candle came up and then a red candle came down. So there's a flat top, and what does price do? It pushes up above it. So we can say if price comes back down to this level here, and we get a confirmation candle on the 5-minute time frame chart, then we'll take the trade. So let's drop down to one of those incidences where we see that. So at this point, here's the first time that we can see price came down and touched that level. So let's drop down to the 5-minute chart, come back to our arrow, and see what we see. All right, so here's our level. Price came down to the lower Bollinger Band. We're waiting for a confirmation candle. Here's where we get it. Boom, right there. And that's where we know it's at that level. We recognize there might be a few more candles that are taking place at that level because we're looking at more price detail. It'd be even more candles if you're looking at an M1. But then we can take this confirmation candle for 3 candles. Our entry would be at the top of this green candle here. 1, 2, 3. Price closes well above our entry point. We're in the money the entire time, and we win the trade. So top-down analysis, combining multiple time frames and looking for that final trade entry reason, either with a confirmation candle or when you're in hourglass, you could look for a call option. You could look for an up arrow on the 5-minute time frame within Cash Trap for that final trade entry reason. That becomes your reason to get into the market. And so by utilizing that, then you can do that over and over again. As price comes back down to that level, you can take each confirmation candle until you see a further breakthrough. All right, so with that, hopefully you're able to provide some clarity on how to effectively do top-down analysis. You're utilizing a higher time frame resistance level, either a flat top or flat bottom. And just to double and triple emphasize this, when you're considering flat tops and flat bottoms, you're looking for a put option if price is below a flat bottom, okay? Because, and where are you looking for it at? At the flat bottom of the higher time frame. That's the approach. So look for that down arrow on Cash Trap at the point at which price comes back to the flat bottom of the higher time frame chart. So the M15 in this example, okay? If price is above a flat top on the M15, as price comes back down to that level, drop down to the M5, look for a call option. So you're looking for call options when price is above a flat top, put options when price is below a flat bottom. Use the arrow in Cash Trap for your final trade entry reason, and you're going to win a lot of trades. That'll help you to filter through some of the arrows, because there's no doubt about it, you can't take every single arrow in Cash Trap, okay? You're not going to win all your trades, and you're going to get a much better win rate if you apply just a little bit of analysis and then look for that final trade entry reason. And so with that, we'll continue to discuss some of these concepts throughout the week, provide further clarity on a lot of these indicators. And then as we kind of nail down all of our final confirmations and understandings of some of these indicators that are on the new Go Liberty platform, we will definitely be sharing those with you, and we will eventually provide a training video as well. So with that, hope you guys have a fantastic day. Appreciate you being with us. Stay plugged in, and you'll gain the knowledge that you need, but utilize that imagination to comprehend getting to those bigger numbers. That's what will help you grow your accounts. With that, Brandon, I'll turn the time back over to you.
Awesome, guys. Hopefully you got great value. So put value inside the chat. We appreciate you for jumping on 5 days a week. We're here Monday through Friday. The only time difference is on Friday, 1 hour earlier. All the calls are recorded. 3 minutes when this is done, you'll actually see the recording. We'll have it titled for you so you can actually refer back to it. We'll have specific keywords in there in the title as well, so it's easy for you to search for future reference. Again, the email address, jbboyd25@gmail.com. That is for the flyers for Club 50, Club 100 on Friday. We're excited to recognize you guys. Guys, let's make it a Wednesday, a great Wednesday, and apply what it is that you've been taught today. We'll continue to bring you more and more training to help you become more accurate with your trades and have a higher win rate. Have a good day, everyone. We'll talk to you soon. Thanks, everyone.